Hello, welcome back to How About That Crypto. You're watching daily crypto news and updates with your host, Bitcoin Stylist on Twitter and Bitcoin Hairstylist on Instagram. I'm here Monday through Friday, and I explain crypto and Web3 while keeping you up to date on all the latest. Today's news and updates is all about the markets are crashing again. We have another ETH upgrade delay. This has contributed to suspended withdrawals of crypto assets. And this, of course, leads to panic. What does all this mean? Not to worry, I'll explain it all. But first, if you like or don't like the content, please let me know by leaving a comment below. If you're listening on podcast, please give me 5 stars and follow me. If you're watching on YouTube, please smash that subscribe button, ring the bell. It helps support the channel and it doesn't cost you anything. Just to be clear and litigious, this is not financial advice. This is for entertainment purposes only. You can use the links below to do your own research. Okay, the markets are crashing again. Ethereum upgrade has been delayed. This has led to suspended withdrawals of crypto assets, which leads to panic. And so, yeah, let's get into it. Yes, Ethereum's upgrade has had another delay. I would like to share share my screen. If you're listening on podcast, please just use the links below to follow along or just listen up. Author Olga Karif reports for Bloomberg, Ethereum's difficulty bomb delay is bad news for revamp. Code feature is designed to help with Ethereum upgrade. Delaying it raises fears that the upgrade could take more time. So let's see. I just want to read a little clip here for you. Our little paragraph. Ethereum's big transition to a more energy efficient system that developers have been promising for years could be kicked down the road yet again, as they plan to delay a so-called difficulty bomb that's designed to slowly boot miners off the blockchain. As I've discussed in the past, Ethereum is in the process of trying to change their consensus protocol to proof of stake from proof of work. The consensus protocols is their security and centralization measures. Think consensus as in we need to reach a consensus, as like amongst all of those who participate in verifying transactions. All right, so I just want to jump over here real quick, just to kind of let you know what we're talking about. If you don't know what the heck, it's like, Robert, what the heck are you talking about right now? Let's see, where is it? Okay. So if you're listening on podcasts, I'm showing a screen from investopedia.com. It says consensus mechanisms, proof of stake, proof of work. We've talked a lot about proof of work mining being banned by proof of work mining being banned by New York State. And that is the energy intensive mining operation that verifies the blockchain with all right, here, I'll just read it for you. Sorry, I'm like blanking right now. The block creators are called miners, and they participate. In order to participate in mining, you must buy equipment and buy energy to become a miner. So think of it like this. Proof of work means you have to solve puzzles, and in order to win a reward, a block reward, and then if you win that block and the reward, you also get to process all the transactions inside that block. And then as soon as that block gets filled up with transactions, it gets capped off with cryptography, and a new block is formed, and a new miner is, and the next person to solve the next puzzle is going to get the next block. Now, why do they do these puzzles? It's because the complexity of the puzzles increases, which means it needs more energy. The more people get on to the network to mine it. And this prevents anybody from taking over the blockchain and creating fraudulent charges. Now, a proof of stake means that you take your ETH, your coins, you pull them into staking pools, which get selected at random. So the bigger the staking pool, the higher probability you become the validator. So the more coins in your pool and the more computers going on in the network, then the larger the pool, the higher probability due to the amount of ETH stake. There's like a minimum. In this case, Ethereum, there's a minimum coins that you have to stake, and but the more coins, the larger the pool, the more likely you get selected to become a validator. This also has its issues with insecurity, because that means people who have a lot of money can overtake the network. But that's a whole nother conversation. Okay, so let's just jump back to this. So basically, Ethereum is in the process of changing from this high energy intensive proof of work that Bitcoin runs on to go into proof of stake, which it doesn't require mining and puzzles creations. It's just everyone kind of pulls their money into the different staking pools, and they get selected at random to validate the transactions. And everybody in the pool gets a fee when their pool is selected for validating that transaction, and it gets divvied up based on how many coins you have in that staking pool as it pertains to the whole of the staking pool. So the bigger the staking pool, the higher probability to become a validator. All right. So the difficulty bomb, which is a special code that's always been a part of Ethereum, swiftly increases the computing difficulty of the mining the underlying token, eventually making it impossible to do so. When the bomb goes off and is allowed to run its course, it's an indication that the days until the so-called merge, Ethereum switch to proof of stake system for ordering transactions, are numbered. So why are they doing this? For energy consumption, but also because of scalability. Like, it's so slow. Proof of work is so slow. So proof of stake can increase the transaction speeds much higher to start getting into the speed of, say, credit card transactions. That's the goal anyway. I mean, it's a long process to get that fast, but this is part of the process of scaling Ethereum blockchain. Well, in order to switch away from proof of work, then what they're going to do is they're going to put in this code that causes the difficulty of those puzzles I was talking about for proof of work to get so difficult that it requires so much energy that it is not profitable to continue to mine, which will kick off the Ethereum miners, making eventually it only being proof of stake. So this has been delayed, and that the concern is that the merge will get delayed as well. This difficulty bomb is something that is supposed to go with the Ethereum's update, but Ethereum's upgrades can have years in the making. But the first step is the merge, and then eventually the difficulty bomb to kick everybody off of the proof of work onto the proof of stake blockchain. So this is delayed. This, of course, creates concern. Hey, all these Ethereum are staked down and staked, waiting for this merge to happen and these upgrades to happen, and then people would be able to unlock their Ethereum that they have locked it up for these upgrades. And that everyone's wondering if this is going to cause prices to go up or down. And with so many Ethereum locked up, that means that the value of Ethereum is fluctuating right now. I'm just going to jump into the next one because I'm kind of going over into the next topic. Okay, so we got the facts are that Ethereum delay or potential delay, but the kicking the can down the road of the difficulty bomb puts pressure on Ethereum for not being able to make the upgrade. And if it can't make the upgrade, then that means that there's question in the value. And so let's kind of jump into the next article here. So basically this whole fear, it's how is it related to crash? Like, obviously, like, Ethereum is a worry, but like, why is the whole market crashing? Well, this is contributed to its crypto lending platform Celsius suspending withdrawals. This, of course, creates panic. Panic creates sellers. Panic sellers create runs and crashes on banks, assets, and prices. Author Omkar Godbol reports for Forbes, Bitcoin crashes, Ether slides as major crypto lender Celsius suspends withdrawals in an unprecedented move. So basically, inflation was expected to stay the same or go down. Instead, we know inflation went up. This caused a sell-off, and then Celsius suspends withdrawals, like WTF. Last month, we had higher than expected inflation, and then Terra collapsed. This month, we have higher than expected inflation, and then Celsius freeze withdrawals. So what happened? Kind of going back to where we started with this conversation. So first, you have to understand Celsius. Celsius is valued at over $3 billion and holds over $12 billion in assets for customers. It's a lending platform. They say that they only deal with over collateralized loans. So you give them say $100 worth of crypto, and they'll give you $25 worth of credit. And then you can use that credit without selling it to turn around and trade it. So you're borrowing it, you're avoiding the tax implications of selling, and you can borrow, and then you can try to make money with that new ETH, and then you can cash it in. So the downside is if the prices start to drop too quickly, then the collateral, that $100 worth of crypto that you put up, could become liquidated if it drops too fast for you to shore up the value. So like if you have to maintain a certain percentage of debt to value, loan to value ratio, then and you can't keep that ratio up because the price is moving down too quickly, then you can see this cascading liquidations. All right, so also what may have kind of like led to the Celsius decline is expected in this article here is that the ETH upgrade delay caused the coin called STETH or staked ETH as have been dropped. So this is going to get a little like confusing real quick, but I'm just trying not to like take all day to explain this. So in order to run the test network to upgrade Ethereum, they need people to stake their Ethereum to start playing with these staking pools and run tests and audit it for bugs, etc. Well, when you lock up your stake, you earn an income. You earn, I don't even know what the percentages are. I'm earning, I think 3.5% or something like that, 3.75 or something like that percentage on my ETH as a reward for locking it up. Now, the thing is, I cannot take my ETH out until the upgrade happens. So my ETH is legitimately like stuck in this thing. Well, there are places where you could stake your ETH, and you can't touch your ETH until the merge happens. But they give you staked ETH coins, which is a synthetic derivative version of Ethereum. So you can then turn around and use your staked ETH, which should trade at a value of 1-to-1 with Ethereum, but it doesn't have to. It's not pegged. It's just one staked ETH equals one ETH. You just can't cash in your staked ETH for your ETH until after the upgrade. Yes, more derivatives. This is always getting us into trouble. Well, guess what? There's a divergence in price between the staked ETH and the ETH price. And this is probably because people try to start getting rid of their staked ETH when they hear, oh, we should be worried about this upgrade. People are like panicking to get out of their staked ETH positions. And since people use those staked ETH to earn yield or take out more leveraged positions to continue to trade, then that means that we have those liquidations, those cascading liquidations I was telling you about. And the price drops and more people getting liquidated means that the price continues to fall. And so all this leverage creates tons of volatility. And so that's that. Did that make sense? Do you understand? People stake their ETH, they get a synthetic version of the coin, they turn around and get leverage on it, but then there's a delay. So people try to get out of these positions quickly. So they take a discount, which causes further discounts, which causes the price to go down, which causes the leverage, the liquidation, to happen on these leveraged positions. And that causes this panic selling. And then apparently Celsius had a lot of exposure to this and they had to stop withdrawals. And that, of course, makes fear in the whole market, because if Celsius goes under, then it's going to bring down a lot of people. So this is worrisome. This is scary. We will keep an eye on this for you. Please leave a comment below. Tell me what you think. Let me know if this made sense or if I missed anything. Also, please subscribe, like, comment. It helps support me. It doesn't cost you anything. I look forward to hearing from you. Have a good week. Hodl on.